Welcome to another episode of Raw Stocks. This is Rustic. We're going to take a look at Tesla's daily chart and see how we did on our predictions from yesterday's video. So let's go ahead and dive right into it. It's going to be kind of a short video today. I got some other stuff going on, so we're going to make it quick and sweet to the point. So let's start off with the chart that we used from yesterday's video. Okay, I went ahead and took some of the other indicators off so that we can just have a more clean chart. We're going to look at some of the levels that we have. We're going to look at where price came from, where price went to today, and where price might go here in the future. So let's start off by looking at where we came from yesterday. In yesterday's video, I marked off a few levels right here. I marked off this breakdown candle as a couple of different areas of interest. And I marked off a weekly liquidity pool along with that daily liquidity pool that came in that wick from last Tuesday. And we said that that was going to be a very key area of interest. And to see if that wick in this price movement was just a draw on liquidity to eventually head lower. And whether that's a long-term lower or a short-term lower, time will tell. But what happened today is that we did have a gap down open, and then we just basically sold straight off. Right? And so in yesterday's video, we said that if we start heading lower, right? If this all this move last week was just a draw on liquidity from this wick, and if we started heading lower, where would that lower likely be? Right? We have levels, right? We hit that level. We traded below that level. We did not go down into this level down here below. And what we did do is we traded into the fair value gap. Okay, we've referenced this fair value gap all the way since it was laid on Tuesday, September 12th. We said this is going to be an area of interest. You can see down here this fair value gap, which was also a daily fair value gap. We saw price head up, come back down and test it, ultimately wanting to head higher. So we could see something like that happen here where we come down and we test any of these different levels inside this fair value gap. We could test the consequent encroachment. We could test this horizontal level. We could also test the bottom of the fair value gap. All of those are fair game, still leaving this fair value gap open, still remaining bullish for the longer term. So we'll just have to see as the week goes on whether we want to continue to trade down into this fair value gap. We're going to be looking to see if price does not close below the low, which keeps it open, which also keeps the door open for a move higher, right? Where would that higher be? It would be back up to test this high here at buy side liquidity. It would also be up here to test the weekly liquidity. So right now we're just watching. Something to note right here on the daily chart is that the price, even though it traded down to, chose to close above the low of the candle from last Monday. So that is important. It doesn't mean that we won't trade below it and close below it tomorrow, but for whatever reason today, it chose to close above that low of that candle. So we'll just be watching to see if, again, if we trade down further into this fair value gap, ultimately heading higher, or if we trade down into it, close it, and head down to this next fair value gap. Between these two fair value gaps, we have the volume imbalance between these two candles from the high here to the low or open of this candle. We also have that gap to close. So we'll be watching to see how price reacts in it and to this gap and see if there's a willingness to want to run lower. Something that I would recommend doing is drawing a trend line from the low here through the low here and drawing that up into our liquidity pool. So by connecting those lows, we can see we still haven't broken the trend line yet. We'll see what tomorrow's price does for us. There's a possibility we could come down and test that trend line. That test of that trend line would put us right near the consequent encroachment of that fair value gap. Again, consequent encroachment is 50% of a fair value gap. And so we'll draw that level out right there. It ends up being 261.48. And so if price comes down there, it also intersects with the trend line here. So we could see price come down, hit it with a wick and rebound in the same day. We could see price trade down here, maybe trying to trap some bulls who are eager for that breakout or that breakdown and who are anticipating a move lower. Could be a fake out with FOMC coming up on Wednesday and the meeting happening over the next 2 days. We could see that attempt to trap some bears and then again, head higher following this trend line. So that's something we'll be watching for, is that trend line. Okay, we also want to mark out the trend line from this top to this recent high here. And we can see we have a triangle forming. Okay, so right now we're still kind of approaching the apex. If we break out and set a different high, we can adjust that trend line. If we also break down, we know that that's a breakdown. If we start closing candles below, we look for a potential back test. It could head lower than that. Tesla doesn't always like to back test trend lines, so sometimes it just gets running and it gets moving. So we'll just have to see again where price wants to start moving, but we're going to be following these trend lines, fair value gaps that have been laid that are bullish fair value gaps, and then these levels that are marked out, especially focusing on this liquidity pool if we start heading higher. And then again, we've done a lot of referencing to this liquidity pool, which isn't as important now because the liquidity has been taken, but that was that area of interest with this wick where we said, and where I thought potentially we have institutions and big money, right, trying to get their orders filled that didn't get filled in this wick, who want to go short. They're going to run price back up to get the most optimal price on their shorts in this wick, get their orders filled, and then what? Bam, slapped it back down, right? So we could see more downside where whoever entered in these shorts here are potentially looking to cash out on just a short-term swing. So that could be a possibility. So we're going to be watching that as well, seeing if price wants to come down and if this was big money loading up kind of in this wick and in these highs. Knowing that there's a trend line here, right? And so if we're hitting that trend line, we might want to come down and then break this trend line and head lower. So let's go ahead and look at a 1 hour chart and see if we see anything different than what we have here. Again, we have those weekly liquidity. This is today's price action here on the 18th. We sold off in the beginning. We tried to rebound. We ultimately ended up just kind of trickling down throughout the day. It's a little bit choppy. You'll see as we get to the lower time frame charts, there was kind of like a bear pennant, and it turned into more or less a bear flag, and eventually kind of broke down from there. But we'll take a look at that. That aggressive sell-off in the morning got bought up, and then, like I said, we just kind of trickled down from there. I would say you could, if you want to draw more trend lines with a shorter time frame, you could look at this trend line here that also connects to that trend line and say, okay, we might come back down and test this. We might try to pop up. We might kind of fizzle around in here, but before deciding, are we going to drop or are we going to pop, right? Up to this trend line, down to this fair value gap. Inside a 1 hour fair value gap here, which is above this daily one, partially in, we have the consequent encroachment, right? And we have this whole fair value gap. So we could continue to trade down into this without ever even getting to this fair value gap, and we could see some rejection back up to the upside. But we're watching for this trend line to get broken. We have this 1 hour trend line that's a little bit more sharp than the daily trend line. So that could be an early indicator that we pop that trend line. We might be heading to the other trend line, right? So somewhere in the mid 260s, depending on where we hit it, if we were heading up, you could catch a nice run over maybe a day or two up into the 270s if price was heading that way. I'm going to go ahead and delete this one just for the sake of moving on to the next charts. Let's go ahead and look at the 15-minute chart. Okay. Again, today's price action on the 18th, got the gap, right? Something to be watching for. This gap, it's inside of that liquidity pool from the previous wick from last week that we talked about in depth, right? Something to note is that right here in this break of structure, we have an untested, unbalanced price range, right? So if price wanted to start heading up, we'd be looking to balance that price range at 271 and some change. So that could be a good area to target, especially if we come down, hit this trend line and show that it wants to reject. Where would I be looking? I'd be looking at weekly calls up to 270 would probably be the strike price I'd be looking at. Anything beyond that, I always teach that that's icing on a cake, right? And what we're looking for is for price range to be balanced. And then beyond that is great. but we're not looking for anything more than that. Just trying to catch those moves where price gets balanced, because I don't see anything above here currently that isn't much higher that is unbalanced price range. So all of these ranges right here, balanced, balanced, balanced. This one has been balanced. I believe on a 4-hour chart there is some unbalanced price range a little bit higher up right here at 286, but I don't anticipate that's going to be on the table this week. So we'll be looking at that later. If we do head higher, breaking these highs, breaking this trend line, where would we target before we get to the weekly liquidity? There's an unbalanced price range that sits in here somewhere, and it's on the 4-hour chart. If you guys want to check it out on your chart, if you're using the Smart Money Indicators by Lux Algo, that's what I use. That's what I recommend. I often teach how to set those indicators up so that your chart can look like my chart. So again, 15-minute chart, kind of stuck in between this range. I'll mark it off real quick with a little rectangle. But this was kind of our bearish, flaggish, pendant sort of deal, right? Today, we just kind of chopped around. We could even take those wicks out and say something like this, which was a little bit tighter range, right? 268, 264 and some change, right? Chop, chop, chop. It is a bear flag, bear pennant, whatever you want to call it. So the idea would be that we are looking for it to drop, but how far that drop is unknown at this point. We could find support, although right here there's not a lot of support on current price structure. Did have a little bit of support in here where we found that bounce, but now we've traded back into it, still chopping around. So if we were to drop and break this trend line, we again would be targeting the below fair value gap on the daily chart, but we would also be targeting potentially this little area support here, this little area support here, even lower this area support here. So a couple different areas. I'd be looking for a pretty significant drop though if we do start breaking this trend line again down to test some of these lower levels. We do have an unbalanced price range right here as well to 258. So we could see breakdown, hit that balanced price range, potentially even bounce up from there. So just again, different levels to be looking for. I've shown some of those unbalanced price ranges over the weekend and last week on some of the other videos that I've done. But that's a model that I like to practice and teach. We'll go down to the 5-minute to see if there's anything additional that we missed in the higher time frame charts. Again, there were, if you're day trading, there were a couple different things you could have been looking at. Could have taken this first trend line, seen the breakout, but you wouldn't have got much of a move if you were trading that. We could also look at this little tiny triangle here and say that there's a possibility either using this bottom here as a support level that we could chop this and drop, or we could also just use the trend line from the daily and remove this one. And we could say if it breaks this, then we might be testing this level. If it breaks this, we might be testing this horizontal level. If we break that, where are we going? There's an unbalanced price range in here. There's a fair value gap in here. There's some order blocks down here. So lots of downside targets, lots of upside targets too. If we break this trend line, where are we going? Potentially to test the top of this kind of chop range. If we head higher than that, we have a 5-minute unbalanced price range at 271 and some change. We have a bearish order block here. That's important to see, that if we were to pop up there and then see if it decides that it wants to keep that open or close it. If we were to head higher from there, there is a order block up here, and then we have horizontal levels of resistance with a downtrend line as well. So those are all things I just showed you on the higher time frame chart. But there's lots of different stuff going on. So I'll be excited to see what the FOMC brings. If you guys think we're going to rate hike, if you guys think we're going to pause, go ahead and drop it in the chat. You know, the overall consensus seems to be that we are going to pause, but rates are also not as high as the estimate thought they would be. And so there's still the potential that there's a rate hike in the future. We'll just have to see what happens. Go ahead and like and subscribe. And thank you guys for all the support. I'll look forward to seeing you guys on the next one. Thank you.